So we're seeing a little bit of a mixed picture here, mixed signals in terms of the oil rally that we've seen, kind of faltering. What's going on?
I don't think that the fall in oil prices should be too big a surprise to most people. Effectively, what we have is supply side, which is still outweighing that on the demand side. So we have seen a roll-off of some of the capex that we expected from the lower prices earlier in the year, but we still have an oversupply situation in oil. And, of course, on the other side of it, we've had speculative activity pushing into the oil market fairly strongly. So I think once people realise that, yes, supply is slowing, but simply the demand is still quite soft, and as seasonally we roll off of the peak demand cycle, it'll become fairly clear we still have an oversupply of oil and we can expect lower prices as a result.
Sure. You know, we also have that June 30th deadline for Iran's nuclear deal. That could possibly increase some of those export numbers for OPEC as well. This concern over OPEC overproduction, I mean, where can that send prices to?
Well, we certainly have plenty of supply coming to the market. Iran is one example of where we could get that additional supply. Continued pushing up of OPEC production in the other member states is also a source of increased supply. We think that you could see prices shifting down to as low as around the $50 a barrel again, potentially. But the supply side also in the US, we've seen a significant cut in the number of rigs drilling for oil over the first part of the year. But the higher prices now are starting to incentivise some of those producers to come back into the market, hedging out higher prices into next year. So we could actually start to see the early signs of a production rebound in the US as well, which adds further to that oversupply situation.
Sure, and a lot of this, of course, we're focusing on China's slow growth, really impacting commodity prices as well. We have this kind of a grave situation for Chinese steelmakers now. You've got iron ore back into this bull market, driving up costs, squeezing profits, but we also see steel prices that are falling. And I want to quote CISA saying, it's the dough becoming more expensive than the bread. We have PMI numbers coming out tomorrow. What do you expect coming out from the manufacturing sector?
I actually think the manufacturing sector will find some stabilisation over the next coming few months. While we may have seen potentially the worst of the China data, we're certainly not loading up for significant surprises to the upside. So it's sort of a market where you expect to see the data not improving significantly, but certainly not getting too much worse either. It's a situation where it bounces along the bottom, I think, for at least a quarter. On the iron ore side, we did see stocks squeeze up quite a bit at the first part of the year. That was to do with some weather-related disruptions and so forth from the major iron ore exporters. We expect that those sort of things will start to fix themselves, as well as we expect to see new production coming to the market from people like Roy Hill, BHP, Rio Tinto. So overall, you would expect the iron ore market to slip back into that oversupply situation that we got accustomed to at the back end of last year. I think prices simply roll over from here, and we actually think that prices start to head back down towards that $50 a tonne again by the time we get to the end of the year.
I see. Well, you talked a little bit about the weather situation as well. I mean, we've talked about these concerns of El Nino affecting some of our farmers, especially in India. But there have been some reports saying don't look for disasters. We've got quite better than expected monsoon rain starting off the season quite well. What do you think is going to happen for July?
Well, El Nino is an interesting phenomenon because while technically you could say that the trends are shifting into a fairly severe situation, overall it's all about timing for rainfall, and that's the reality for crop production. So it's all about what happens in the southern hemisphere spring and the northern hemisphere autumn with regard to rainfall. So yes, at the moment India's monsoon is above average. The projections for the whole year are actually below average, but it's all about the timing of that rainfall. And so if we continually see results similar to what we've seen over the last month or so, a lot of the El Nino euphoria of where people have been buying things that are particularly sensitive to a severe El Nino will start to unwind over the next month or so. But reality is we don't know until we get to that autumn and southern hemisphere spring rainfall period to actually see how this could impact crop production. So at the moment, we stand on the sidelines. We think people who have moved now have moved too early. We think some of those trades will start to roll over, such as in the palm oil sector. But we still stand on the sidelines because the forecasters are telling us it's going to still be a strong to severe event.